Volatility analysis.
Oh,
Shit
yeah.
that moves fast and erratic. Volatility rankings. Following our underlyings with elevated implied volatility rankings, i.e. in simple terms, a lot of options on them are being traded at higher than normal prices, projecting a wide range for the stock to be trading at with a one standard deviation, 68% confidence. It's the best way I could sum it up.
For sure.
I'm not a rocket scientist. I'm
Like that.
So I was looking at Market Chameleon's pretty good site for data. A lot of interesting implied volatility data on Market Chameleon.
Mhm.
I want to do some custom stuff heading forward, but yeah. So I found DVA, Davita Inc. IV rank of 116.3, the highest in the past year. I was looking at a 37 DTE short, 19 Delta call, which is the 85 strike, short 16 Delta put, which is the $60 strike. Both strikes are almost 20%, 18% out of the money, with a 240 bid, 275 ask, about 255 in the middle. You probably get filled around there, and a 720 buying power reduction. So it's about 3-to-1 strangled the BPR opportunity. You could probably tighten the put to 65, get a little closer to 2-to-1 with some slight bullish deltas, but earnings are within the trade.
Mhm.
I was looking at this. I think I might take something like the 65, 85 just to get a little, just to feel a little something. But yeah, no, that interesting trade there. Next,
Sure.
Chipotle. We all know what Chipotle is. 18.22 per share. IV rank over 60. We know the tasty level is over 50. Earnings coming up on the 26th, so some stuff might be interesting to come up there. But I was looking at, I think this would be very interesting if I had the money to trade this.
Mhm.
The 18 Delta call and put, which is the 2025 call and the 1650 put. You get 4.1K in premium if you had portfolio margin, I'd say. Currently, the BPR is a 10-to-1 ratio. It's ridiculous. It requires 55K to trade something like this. Man, I think it's like 11-to-1. It's ridiculously big. But in my opinion, if you had portfolio margin, reducing that to 27.5K, it's a massive trade. Gives you a 5-to-1 ratio, which is still far from 3-to-1.
Mhm.
Your worst 5% of losers suggests a 27K loss. So it's a 1-to-1 trade-off for worst loss to credit received. And you'd be getting on the trade out. I was looking at it was 150 thetas with, I think it was like 80% pop or 75% pop. So if you had the size to trade that, if you had a couple $1 million that you had lying around, I'd say
Just laying around.
Yeah, just, in the closet. Pablo Escobar had them hidden in like the middle of like a cornfield. So if you have an extra cornfield or two,
Well, I'm looking at the trade right now, and with earnings coming up in October, and looking at those 37-day contracts, definitely want to be careful. Just because the product is so big, and earnings, definitely want to be careful leading into earnings like that. If you just throw on some wings, I think it reduces your premium by half, which is a pretty significant reduction.
Yeah, that's what I was getting to. I was looking at a little bit tighter on the call side than the 2000, 2030 call vertical, the 1660, 1630 put vertical. So that iron condor, in my opinion, if you get filled at 9 or better, I'd still say it's still a pretty large trade for some traders, but I couldn't really find anything better. You get a very nice trade for 2.1K BPR.
Yeah.
Yeah.
And so that's a massive reduction in buying power. I think that's like a 62% reduction. And then if you go $10 wide, or I'm sorry, $5 wide on the long wings, it's like a 99% reduction in buying power, and you're still collecting over $2 in credit. So
$5 wide, I couldn't find anything that was smaller than 10.
I'm looking at the.
Oh no, I didn't find them. I was looking at something else. Oh, because I was further out of the money. That's why everything was going up by 10 points. So yeah, like a 2005 iron condor, so like 5 point wide.
You're right. Sorry, I misread. It's $5 wide on the call side and then $10 wide on the put side. But that's still like, I'm looking at it right now for the 37 days. It's $7.95 in buying power compared to like, I think it was like 55K or something. With
I'm trading the wrong size here.
But this is definitely an interesting underlying to look at. If you pull out so that it's even, and you go $10 wide on either side, it's still around $700 in buying power.
That's nice.
Like $3 in credit. So this is a really interesting underlying. It's just a massive product.
Yeah.
So I think for like an earnings play,
Chipotle is one of those stocks that, you know, they're a massive stock, but you know, you don't really see some huge swings in them because, you know, a 10% swing in either direction is however many billions of dollars that has to move the market. Yeah, so anyway, I'm gonna go to my bank. I'm gonna take all my lines of credit and I'm gonna trade that strangle outright. Wish me luck.
I've never heard something more financially responsible than that.
Well, there was that guy. I don't know if do you follow a guy on YouTube named Benjamin? He makes terrible financial videos.
I love Benjamin. He's fabulous.
No, Benjamin. Was it Benjamin that or it might have been Kamikaze Cash? Did you ever see that guy either?
No, but I'm adding him to the list.
Yeah, hilarious. So he covered this guy that did a similar strategy, like taking high interest rate loans against his credit cards and other assets he can or debt instruments he could borrow from. And he bought like, I think it was like 50K worth of Tesla calls right before they dropped the Cybertruck, and then when Elon threw the ball at the window cracked and Tesla dropped like 5%. Yeah, so like the guy went on unemployment. He was like destitute for a while, and then he was like, all right, fuck it, we're gonna do it one more time. Somehow he got access to another like 20 or 50 grand or whatever it was. He was like, all right, we're going all in again, and this time Tesla mooned and his calls paid off. So he was able to pay off his high interest loans, and he was able to buy himself a Tesla and have like 200K in the bank at the end of it. So yeah, he's a little bit more irresponsible, but you know.
You know, you heard about that story because that guy turned it around.
Most people don't turn it around.
Most people don't turn it around. But you know what? At least he put his money and his bank's money where his mouth was. I'm sure that always works out. But no, Chipotle, I was not looking at this one. I think that there's definitely stuff to do in here, just being very cautious of the size of the underlying.
Yeah, but, I just like trading big because I'm a degenerate.
Pretty thickums. I think, like, again, leading up to earnings, because it looks like October 27th is the earnings for me. I feel like I would maybe put this on next week because, well, I don't know, man. Actually, volatility is at 61. That's kind of high. A little bit of a sell-off since July and September. Again, another little dip. So that's pretty interesting. I'm going to keep an eye on this one.
Next, we got VMware. This one's pretty interesting for a couple of reasons. IB rank of over 100. When I wrote this, it was 100.2, highest record in the past year. Super interesting option structure. Puts that are $10 out of the money, the 160 strike puts have a bid ask of 20, bid of 18 and ask of 20, so a mid of 19 with an IV percentage of 110. But if you go $10 out of the money on the call side to the 180 strike calls, they don't have a bid. 220 ask, so they're and you know the liquidity outright isn't the greatest on this underlying. Let me see what expiration I'm looking at here because I didn't write.
I'm looking at the 37 days right now, and once you get past 16 delta, these are wide.
Yeah. So did it go down? No, yeah, it's been exactly the same as when I put it up. Yeah, so there's massive put skew as the market could be pricing in a significant downside move, selling a 150 or a 160 put. You see that right there? Selling the 150, you're selling the 150. As a percentage of the buying power, it's a very attractive, you know, you're doing like 2/3 pretty much. Still pretty, you know, if you want to do like a spread, you can do like a 10-point wide spread and you're getting 625 in credit for 375 loss. The 150, 140 put vertical. But yeah, if you're just selling it outright, very attractive. But you know, as you can see here, based on the market structure, I'm willing to bet there's something that these numbers aren't telling us. Meaning there's a binary event soon, data drop, or elephants raiding through their headquarters.
Maybe, I don't know, the elephants sound most likely. Yeah, this is an interesting one. I haven't looked, this is, I'm not loving the liquidity. It's got a decent number of durations available and a decent number of strikes, but it's not very liquid. And I feel like it's just had a really crazy rally since it looks like August, and then also just throughout October, it's just been kind of creeping up. So I feel like I could see making either directional argument. I don't like trading price directions because whenever I make a guess, I'm usually wrong. So I usually trade in volatility. But with this IV rank at 100 right now, which is so high for an underlying that's priced at what, 170 right now, so high. I'm gonna add this to my watch list, and I'm not gonna touch it with a 10-foot pole yet. BMW, you're not doing anything in here?
Yeah, I want to do a little bit more research on them and see why there's such massive put skew. I'm going to float this by Vaughn and see if he's ready to sell some puts. We'll be talking about it later. We're actually going to Rivers tonight to play some poker. So
oh, hell yeah, dude. Have fun.
It'll be a good time. He's coming back to visit. Yeah, we're going to chop it up a bit. I'm going to float some ideas by him, but yeah, so that was volatility analysis. Now I wanted to change gears onto the Golden Knights game, but you got anything you want to add before that?
No, these are interesting trades. A lot of the time when you see like volatility as high as what we were looking at, like it's with much cheaper, lower cap underlyings, which there's not a lot to do. And just because like the buying power requirements tend to be high, even though you don't collect a lot because it's a cheapie. So I really liked the market cap and the price of all the underlyings that you picked. Especially Chipotle. That one I'm definitely going to watch, and I kind of want to do something in there, even though it's
a lot of interesting opportunities on stuff like Chipotle because there's so liquid. They trade at a lot of different strikes, and it's an $1,800 stock. And I remember when Google was, was it Google? Yeah, I remember when Google was expensive. It's always fun to trade high price stocks, because you can do a lot of stuff with them.
For sure, yeah. So I'm definitely going to watch that one leading into their earnings. I feel like there's stuff to do.